Hello, hello, hello. Happy CPI Thursday. How's everyone doing? Good morning, John. Good morning, Jacob. Good morning, Patrick. Good morning, Martinez. Good morning, McRangers. Hey, Jake. Good morning from Vegas. You're up early from the desert. Richard says, whoosh. 95 degrees. Yep, exactly, Jake. It's the desert. It's where it is for the dog walks in the morning. It's nice. Nice 90 degrees, walking the dogs without the sun up. It's beautiful. Good morning, Ted. We get another hot one. We've hit 116 here a couple times this week. Good morning, Eric. SPY and AMD went red. Uh-oh. Uh-oh, is this the sell the news event? We had another big rally yesterday. We had the CPI coming out. Thank you, everybody, for tuning in. Thank you. Hope everyone's having a wonderful Thursday. So we're getting core inflation out of the way. Much better than expected, actually. Month over month headline deflation, not disinflation, deflation print. Minus 0.1%. Deflation. We'll have to see if that keeps sticking, but inflation rate year over year, 3%. The core excluding food and energy, 0.1%, better than expected, and core inflation is still is 3.3%, but better than the expected 3.4%. Also, jobless claims coming in slightly better than expected. 236 to 240, coming in at 222 and continuing 1860 coming in 1852. So that's better. Now we still have Boston coming up. We got some bill auctions. I'm rolling some T-bills today in the bill auction. We got some mortgage rate informations. We got Mucilex speaking. Fed, Muselim, sorry. Uh, oh, and then we got the monthly budget statement, but that's it. Remember, tomorrow we have, why do I have Japan numbers on it? This is weird. Nothing against Japan, but I'm just trying to keep the numbers sane. Although maybe because the yen is getting rocked today, yen is getting rocked, the double. Actually, last time I looked, went straight to first target. It was not tradable unless you were doing something based off momentum. But yen major reversal, dollar weakening too off that CPI print. We got the PPI tomorrow. We got consumer sentiment and inflation expectations tomorrow. So the week is not over yet. So far, we have Nvidia still up, not as much. Nvidia hit, if you were looking pre-market this morning, Nvidia hit the second double target. We have HD moving on up. We have Pepsi. Pepsi released earnings, was a beat on earnings per share, but more importantly, remember, a miss on revenue, and the CEO of Pepsi was talking about how the consumers I'm just paraphrase, getting pickier with where the money's going and shopping for deals. Consumers tapping out. But will a quarter point rate cut help? In terms of markets, let's just do our sectors, sorry. The only thing negative is comm services, and that's barely negative. Everything else led by basic materials because gold's rocketing higher right now, up 133 basis points. Fed watch now really pricing in. Let me refresh this again. Really pricing in the rate cut. Market saying the Fed is going to cut 78% on the CME Fed watch tool for a cut in September, and then another one before the end of the year, most likely December. So pricing in Fed funds rate dropping below 5% by the end of the year. Fear and greed. We're finally back to greed mode. Finally back, market momentum in extreme greed, but the strength and the breadth, our underlying strength and breadth are still in the dumpsters. Let's just see where the Schiller PE is. I'm curious. Almost to 37. What could go wrong? I did not look at Delta. I was more interested in Pepsi from an inflationary point of view and in a consumer point of view. Now remember, tomorrow, even more important than the PPI, we have bank kicking off Q2 earnings. JP Morgan, Wells Fargo, and Citi, big ones tomorrow. So that's even going to be more important than the PPI unless the PPI does something really, really freakish. All right. So where did I look? Good morning, Eric. I think I said that already. Good. Hey, Charles. Can we look at Sedge G and C if we have some time? If we have some time. All right. Is the mark now? Remember, we got the CPI out of the way. We got cycle tops going into financial bank earnings tomorrow. We got weekly cycle tops and daily cycle tops. You know, can the thing keep going? Sure, we can keep going, but I mean, this is just grinding higher on not super strong volume. So we'll have to see. Hit the next little cluster. Let me fix the chart there. Yesterday running up, hitting the next little minor area. Oops, wrong one. Wrong one. There we go. On a continued rally. Next target 57.44 to 57.71. Sort of a wide cluster, but we're not even getting proper pausing bars. The last great pausing bar was back from June 20th. That should tell you something. Market just grinding higher, very overbought. Still divergence is not a triple divergence, only a single divergence, I should say, with cycles at the top. Again, little toppy here, but key support really coming in at 56.75, and then the major support coming back at 56.45, 56.50. Other than that, like yesterday, it was choppy in the morning, and then just put on his rally cap. Little chop in the morning, then put on his rally cap yesterday. Flat overnight. Little pop with the CPIs, but a quick little reversal to the consolidation overnight zone and trying to turn up. So going to the open, really pay attention to 56.80. NASDAQ hit the next target, this 28.84. 28.84, and we again can't get super strong pausing bars. We're gonna have to go back down here on a rally. So we're going to a longer. When we can't get a pausing bar, we're going to go to the next longer significant pullback, which was from the lows in April, and then use 20,185. Again, cycles at the top, still a single divergence potential, but nothing's triggered with divergences. Just grinding higher. Your key support's coming in about 20,600. That's the major support. Your minor support's coming in right about 20,850. Again, you see the little breakout, the overnight flat line. Breakout with CPI numbers, and then the quick reversal. So it possibly is this sell the news. Sell the news after the CPI is coming out. We're going to have to see. But you know what? This market just wants to keep grinding higher. Just wants to keep grinding higher. Remember, the trend is still up. Now, the market's in a very unstable condition. Very unstable condition. I think it's going to take an event coming out of the blue. An out of the blue event, not something planned, not something that everybody's planning on watching, but an out of the blue event to really potentially shake up the market. What that is, no idea. It'd be out of the blue. Dow, as I talked about the other day, was expecting it to retest these high areas, which it's done today and yesterday. Again, it's going to take a lot of momentum. Now, if the Dow can break above the beginning of April highs, it could get very interesting to the upside with the last little momentum push. Other than that, key support now coming back at about 39,850. The Russell even rocketing. Everything's hunky-dory. A quarter point or a half a point rate cut's going to save the small caps. The Russell, though, hitting that 87.5 on the last little retracement, and on the bigger retracement, Let's go look at that one, because now this is turning into triple top territory, so the potential double is off the table. The next key target for the Russell is 20,135. You bet the other blue is either politically or literally out of the blue war news. I would tend to agree. It could be one of those two things, but again, out of the blue. Other than that, and the reason I say that is we have, for the people who have now read Ubiquity, we have a very unstable sand pile that keeps climbing higher. We don't know the one thing, the one grain of sand that could trigger the cascading effect. But this is not built on a solid base. Can it keep getting bigger? Sure it can. But the bigger it gets, the more unstable it gets. Does that mean you just exit the market? That's your choice on your time frame. I definitely know where stops are. Definitely know where stops are for the longer term stuff. In the short term, it's still just climbing higher. VIX, still nothing to report here. DAX, nothing to really report here. It looks like it's setting up a little mini double, but nothing really to talk about there. Notes, breaking. Now, watch today with the notes. On a close above 111. A close above 111, you can keep seeing the 10-year yield weaken. Next targets on the notes, rallying 111.25, 112.17 and a half. Here's your yield. The yield is not quite breaking down below recent support. So really watch where it closes in relation to about 4.2, as I said yesterday. Currently trading below it. But the tipping point probability-wise is a close below 4.137. Not quite there yet. 10-2s. Still trying to build a bigger base. Dollar index getting hammered. We had the little percent B bop, pop, and again, tighter stop, and then we get the CPI numbers coming in better than expected. This getting rocked. If we start breaking below this 106.50 area, 103.20 is a quick trip probability-wise. Crude. We came down, hit the second target on the double, remember, against the rotation zone, and this is why. For everybody watching that against the rotation zone, you caught on the rotation zone closing up. If it does roll over again, you still have the major support. At this point, I just watched this 50. Other than that, crude getting to the bottom again on the daily, but at the top on the weekly. So this is sort of mismatched signals. So from my standpoint, it's as long as we don't drop below about 80 bucks, still got to go with the potential consolidation / higher price action. If we drop below 80 bucks, then we could quickly move to 78.50. Gold, here you go. Again, keep watching. Looks like we're definitely going to close above 23.98. That was key from the 7th sell-off. Retested with the reversal move and now breaking out. Gold, I'm expecting to, at a minimum, retest the highs from May and the highs from April. Because remember, long-term bullish mode. And the double that was before got invalidated with the sideways move and never triggered. And so it's just built a bigger correcting pattern. So you see here overall with the weekly, sideways correcting pattern with the rising rotation zone. And you have weekly cycles still running up. So I'm definitely watching for the breakout in gold. And if we look for the next key targets, the minor targets are already up there. But the next major targets would be a cluster about 25.33 to 25.52. 10-year, not much movement on the yen. Here's what I was talking about, though. On the yield, I should say, that's your double completed. Back to the prior breakout zone. This actually looks, this, I doubt this is just from the CPI number. This really looks like the intervention. This really does. Looks, but we'll have to see about that. But back to the breakout zone, back to where it was at the end of April. So that will be very key. But overall, that's the only thing. Overall, we're going to have to watch now for a bounce. If it keeps pulling back 156.90. Euro, remember we closed above the 62.5. Now, and I said the next area 108.88, and we've ticked that off. Now, this is where we're going to go back to the next key area. And the next magnet price is 109.33. You got some pretty substantial resistance up at this 109 area, so that's where I'd use an intermediate level, but then 109.33. Bitcoin, no trigger. Remember, confirmed but did not trigger. Still trying to trigger the daily double bottom against the rotation zone. Spiders, 564.18 is the next major target on any rollover. 561.32 is yesterday's close, and major support coming in about 556.50. The Qs, next target 505.28. Trading 503.60. Gap fill yesterday would be 502.96. And major support, I'm going to be watching about 496. NVIDIA, clearly going to still gap above. You could have got a. Now, here's a great, we had a quick talk about doubles yesterday and being a reversal. This is an example. This pullback enabled a double. Talked about, I got the screenshot, but this was not a double in the spiders because it was not reversing enough of a move. Here's an example. You can be in a bullish move. This formed a double because it was reversing this move, and this move was big enough. So we've hit the first and second targets. The third target magnet area, this 138, is very key. Not only is it the 87.5 harmonic, it is the final target for the double. So yes, you can get doubles within a larger upper trend. It just means you have to have a pullback big enough to justify the targets for the double. Tesla, still just climbing. It's in a major resistance zone. The technical market price is still 279 area, but we'll see. This is getting very overextended. Earnings, though, not until the 23rd. So just under a couple weeks. All right. Everything is bullish, sell the dollar. Where do we say? I know I got a request for something. Where is it? Where was that? Oh, I hate when I lose it. There it is. SEDG. Solar Edge. I mean, oh boy. You might be trying to put in a little short-term bottom here, a little one. On and you rally, though, your key resistance is 46, 46.50, and you're going against the weekly rotation zone. Is there a strong bottoming pattern? Not really. I'd start watching, besides the gap fill here, I'd be watching for more of a potential gap fill, then at least some kind of pullback before possibly putting in a move higher, especially with cycles getting to the top. And Citigroup. So currently trading against the 67 harmonic and the next harmonic cluster. If it does continue to rally with earnings, 70.25. Your support level is 63.95, so roughly 64. The major support level is 57.50. If you drop below that, it's not good. Very overbought. Remember, earnings tomorrow. So this is going to be very key. Going to be very key, but on a beat, the target would be 70.33. On a miss, I'd be watching for, depends how much, but if you broke that 57.50, 57.75 area, not good. So what else do we have? We have Apple to the moon yesterday based off projections that they're going to sell 10% more iPhones based off the AI incorporation. Well, we'll see about that with topping out consumer. The only thing they're doing, why would you need to buy a new iPhone either? If you already have a 15, 14, 13, the AI component is going to be like Siri. You don't need to do it on the phone, but I don't know. Analysts are bullish on everything. And as Coco says, everything is bullish, sell the dollar. XPI on weekly. XPI. Get to the weekly in a second. Let me just, so you had your little mini double that reversed the move, and now you see it right here. Watch where it closes, 95.17 on a weekly basis. Okay, it's been rejected in this area. Look at the rejection between the 50 and the 62.5. It's been rejected 1, 2, 3, 4, 5, 6 times. So if this breaks out, not only is it a breakout, it closes above the 62.5. Look where the 200 week is in relation to the 87.5. So that would be my target higher. Okay? So that's where that sits. If it does not close there, it really needs to break down below about 89 before you start seeing some real weakness in it. QS just jumped 40% on Volkswagen deal. What's the Volkswagen deal? Again, I don't have the news feed going. Ooh. QuantumScape. I'll have to take a look at that. There's your big jump on QuantumScape. So let's take a look at that daily. Ooh, even above the 200. So what's the next key target? Next key target, 735 and then 802 on a closing basis. And look how stuff lines up with prior price action. Wow. So that's what I'd be watching for, 735 and 802. Your support zone not only is right around this 660 area. Prior support here, above there. And then as long as you don't really drop below about 640, you're still in good shape, at least in short term from the bullish side. Moon landing is real. Thank you, Coco. You got to stop drinking this early in the morning. We know the moon landing is real. All right. With that, let's just peek at the S&P. Going into, well, that's sort of hard to peek at that. There we go. Again, the support base is right before the breakout. The overnight session, 5680 is still key. 5680. Little thing here I will be watching is if on another follow-through close back above about 5696 based off the opening price action. So there we go. That's where we sit. Hope everyone has a wonderful trading day. And I shall talk to everyone tomorrow. Bye for now. You're very welcome, Richard. Bye for now.